Hi and welcome back to Cheeky Crypto. My name is Nick, and today guys we're going to be jumping down into the charts for Vechain, see what's been going on most recently and what I would expect to happen next. As I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. Okay guys, if you haven't yet joined us in Discord, links in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I do think you won't be disappointed by what you find down there. So why not go ahead and check it out today? Here we have Vechain paired up with USDT. We're on the hourly chart, and Binance is our data source here. As you can see, we're still tracking pretty much exactly as we have been for a little while now. It's pretty boring, but essentially, you know, it is all on track. We shouldn't be overly concerned at this point. Nothing has really changed from our structures. We are, you know, still tracking. I'm expecting about 2.7, and then we're expecting about a surge to 4 cent afterwards. This is the same. It hasn't really changed here, and we've obviously clearly got a few areas also marked up here. So we've got the resistance lines and we've got our support lines. I think we're actually tracking into some kind of triangular wedge right now. So if we just check this up here for a second, we just zoom in, we can kind of see that we've been in this kind of this wedge shape pattern right here. We actually found support, just bounced from it, and you know, if we have this kind of structure right here, we can kind of see that we are potentially moving around a bit. Let me just find my A through E. So for example, we could go A, B, C, D. We'll wait for that little push up to E, and then we should break down towards 27.5. Okay, so if I were to draw this out with our trend lines, for example, we can easily then visualize what this looks like. So if we were to grab hold of this, for example, we can kind of see that we're tracking into this triangular wedge here. So once we have that E wave move slightly up, it shouldn't be too much, and then we should basically look for that pullback down. That then targets out 2.75, and then from there, once that is done, we basically look for this progression to the upside up here, right? So essentially all of that's looking really good. This is basically just a pretty straightforward, I mean, we could articulate it as a zigzag, but I think it's probably better just to say it's a WXY. Just coming in here, finish this and move off 2.750, and then move on up. Now, because of this is just a simple kind of let's say simple, it's relatively complex actually, but for the most part is just a simple kind of move from a macro. We could basically take a look at this as again, we should end up with some kind of move upwards, probably finding this upper resistance, pull back down, and then surge up to finish it off at the top there. So it might come up a little bit more, we might not, I don't know. We'll have to see how that plays out. Again, I don't expect it to be fast. We'll move up. We hit this 4 cent. Now, it's possible that we actually kind of find this previous area of support becoming resistance. This comes in at 3.66, right? So it's possible as well that we actually just hit that threshold and then we pull back down. So I'm quite concerned over this one over here, 3.66 cent, as you can see, this blue line just over this side, right? And so this one is one that I'm keeping an eye on, and have done for a while, simply because, you know, all of these kind of resistance points and support points, they're actually kind of trading, you know, inside these kind of ranges, which is fine. But this one over here caught my eye because we haven't really tested it other than a little bit of resistance. So was support turned to resistance. When we come to retest it again, knowing that the macro move is down, of course, could find ourselves with a lot of resistance to try to push through, and we could fall back down from there. So 4 cent is theoretically possible, but 3.66 is an area that I'm concerned about, and we should keep a real close eye on as we start to progress on out of here. But just to clarify, we're expecting a small push up and then a pullback down towards 2.75, and then from 2.75 I'm expecting an upward move. Again, I'm keeping a close eye on the 3.66 cent level. After that, of course, it's all fair game to pull on down. So let me just tidy this up. I'm just going to remove some of the noise so we don't have it cluttering up the charts here. Okay, and I'll remove that. So now we know kind of that move. If I come up into our daily chart here, we can actually see that we are targeting out down at the bottom. Okay, if I grab this and just move it across here, it essentially is 1.77 at the moment, to approximately 1.8, but it could also drop down as low as 1.5 cent well, I guess it really depends. If we don't push to 4 cent and we only hit 366, then essentially we're talking about a 3.5 cent drop coming back down. As you can see here, this is the bounce that's needed. So moving to 4 cent and then pulling back down. It's also possible that if we had to actually measure this from our low point here up to our high point right there, and we were to grab this and move it over, you can see that this could actually theoretically come down significantly lower than even this. But again, taking a look at the history here, areas that I want to kind of, resonate well with and want to keep an eye on. So knowing that there's a potential subwave count of that there, but also when we have this move, which is a 1-to-1 ratio taking us to 1.7, is the one that I'm really tracking. But I am also keeping an eye on whether or not we'll have that overextension to 1 cent. So do keep a close eye on these things. But essentially, yeah, everything's looking pretty well. And once this accumulation zone comes in, this is really where we are going to see very, very significant gains, right? And I think this is really where we're going to be buying, right? So we obviously, from most retail investors, they aren't generally going to be too concerned. If I take today's price, for example, right, it's an 89% reduction from all-time high. For most retail investors, that is a good place to dollar cost average. The whole idea of a dollar cost average strategy is to slowly ladder your way in. And when you're already at like 89% reduction from the all-time high, you're getting a really good deal anyway. Of course, the price is going to come down, in my opinion, and you can continue to dollar cost average slowly as we start to approach the bottom. And you're going to find yourself with a really good position for when this reverses. This is where the maximum amount of gains are going to be seen, when you're in these kind of like 93-95% reductions from all-time high. Okay, there is significant crash. This is also the stereotypical bear market low for an altcoin, right? They retrace 95%. So when we're in these spots, this is where you want to really focus in on buying and not being so fearful that that you're not going to see gains for a period of time. Essentially, this is called investing. It's not gambling. It's not something that you're going to get instant gratification on. This is something that you invest in with a good, decent time horizon. So if you have a 1 to 2 year horizon on your investment and you're looking for your ROI over that time period, this, in my opinion, is where you want to be really focusing in on. You're going to see very, very significant gains on your investment. But again, I'm not a financial advisor. This is just my personal thoughts and opinions on the data as I see it in the charts. I cannot give you financial advice. You'll be hard pushed to find a financial advisor on YouTube. They do exist, of course, but you'll be hard pushed to find them willing to give you financial advice as well, because obviously they have to take a lot of things into consideration. With all that being said, though, guys, I think essentially for a retail investor looking at the charts, looking at the data, when we are pulling back down and we're at these low points, it does make sense to employ a dollar cost average strategy. Of course, there are many strategies, so check out our Medium post that Chris did, basically talking through several different strategies. Join us in Discord and talk to us and mention us and have conversations with us about different strategies. Join us in Patreon and all of that kind of good stuff as well. And we help you guys formulate a plan. But of course, as I said, we aren't financial advisors. Every decision that gets made has to be made by you or a financial advisor. All we can do is give you our thoughts and opinions and our experience of the space. I'm going to leave the video there, guys. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.